Good morning, everybody, or afternoon, or at night, wherever you happen to be. Welcome to a Random Walk update. Random Walk is a daily dose for the smartest investors, the smartest people generally, people who are curious and like to learn things and aren't afraid of long words. Anyway, so digging in without taking too much more time, the observation today is that banks are lending less, right? If you take a look at total bank credit, year over year, bank credit is negative. Now, the interesting thing, you see that's the blue line, that's below zero, which means that at an absolute level, bank credit has now shrunk relative to last year. That's kind of a big deal. Banks are fairly important. Lending is fairly important to the economy, and when banks lend less, generally it's a sign of slowing things down, which is again all part of the plan. Now, the interesting thing is not all categories of lending are negative, right? There are still some category of lending, direct lending, called loans and leases, which is a sort of broader category of loans that still is positive. It's decelerating significantly, but it's still grown more so year over year. And what's also surprising is precisely what kind of lending is actually grown year over year, because it's not what you would expect. It turns out that it's actually real estate lending that is driving most of the growth. As you can see, that is the gray, the commercial real estate loans, and the green, which are the residential real estate loans. There's a tiny bit of consumer loans and other, and it's actually commercial and industrial that have gone negative. Now, that is in fact pretty surprising because if you haven't heard, real estate's been under a lot of pressure lately, and nobody on the residential side is buying homes because interest rates are too high. And on the commercial side, offices are empty. And a lot of the deals that people used to do only made sense in the low interest rate environment. In the higher interest rate environment, it's considerably more difficult. So that is in fact surprising. And even digging in further, you can see that real estate are actually the only two categories of loans that have grown relative to their pre-pandemic average. Everything else is about there or less. Again, it really is quite surprising. It's not what I would have expected, although there was a huge amount of lending over the pandemic, which would even make you think that it would be more likely to contract sooner because it was contracting off such a high base, but it hasn't yet. Um, Look, for the same reason that it's surprising, one would expect that it isn't sustainable. Like if the real estate lending has been keeping things afloat for now, it seems too reasonable to expect that the deceleration will continue and eventually uh, all bank lending will be negative, or all categories of bank lending, maybe not consumer lending, or maybe commercial industrial will see some bit of a rebound, but to the extent that lending is being kept afloat by real estate, one would expect it cannot be kept afloat for much longer. Is that, devastation and apocalypse nigh? No, not necessarily, but it is further evidence to suggest that the slowdown is ongoing and will continue at least for the foreseeable future. That is it. And I hope you enjoyed it. And if you do, sign up when you get the chance. Thanks very much.